and that too after a span of 2 decades. The entire investment community. Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing in trade. We'll also get you expert views to find out what exactly should you be doing when the markets are seeing a sharp intraday fall, and what should be your strategy going forward from here too. We'll get you the expert voices on that, but first up, a quick check on how the markets are doing, the benchmarks are doing. The Sensex and the Nifty are down in trade, over a percent fall for both of them, over an 800-point fall for the Sensex. It's given up the 67,000 mark, 66,790, 800 kind of levels being seen here. The Nifty also below 19,900 now at 19,896, 236 points lower in trade. The broader markets also coming under pressure. You can see the mid caps down about 0.3 odd percent. The small cap index is definitely seeing a sharper fall of almost a percent. All the sectors that we track on the Nifty, 18, 19 indices that we track, all of them are down in trade, led by sharp losses being seen in metals, in financial services, in the PSU Banks and the Nifty Bank, private banks, and the realty space as well. Now, when we talk about the top losers as far as the Nifty index is concerned, HDFC Bank, definitely one of the biggest ones, 4% of a fall for this one after the analyst call and the kind of negative surprises that have come in that the market has reacted to, and of course brokerage houses update after that. JSW Steel, Reliance Industries down over 2%. Dr. Reddy's, BPCL, SBI Life, HDFC Life and Ultratech Cement, the top losers on the Nifty index. On the gaining side, we do have a few stocks like the power stocks, the energy names, Power Grid, Coal India, NTPC, ONGC holding up in trade today. We also have Sun Pharma and Cipla kind of stocks pulling up, ITC doing well in trade today. It's the broader index, the Nifty 500, where some bright spots can still be seen. But time to welcome our guest on the show. Mr. Ambarish Baliga joins in, market expert. Thanks a lot for taking the time out for this discussion, Ambarish. And first up, your reaction to this sharp intraday fall. What would you attribute this fall to? Any 2 or 3 key reasons that you could list for all our viewers today?
Couple of reasons, actually. Basically, it's the Fed meet tonight. Although the consensus is that it will be status quo as far as the rates are concerned, but market is worried about the hawkish note which can come out and possibly an increase in rates before the end of the year. So I think that's what is keeping the markets a bit circumspect at this point of time. And the other thing is that earnings will be starting in the next 20 days. And the markets have actually moved up very well from the last quarter earnings till now. So the expectations also are high. So that's another reason for a bit of a caution. Then we have seen the crude oil prices moving beyond 95. I think it can move closer to about $100. So I think that's quite negative as far as the Indian economy is concerned. And along with that, we've seen the rupee also has been weak. A couple of other reasons also have been there for a while, which is the China slowdown. I think that will have some sort of a rub-off effect across various economies. And we've also seen our exports shrinking to a certain extent. Trade deficit is at a 10-month high. And despite all this, the markets were moving just one way. So I think it was high time for a correction. And possibly the Fed meet is what has triggered this correction. I don't know as to how much lower it can go from here.
Yeah.
But then I think Nifty 19,500, 600 is a crucial level to be watched out for, because below that we can possibly have a much deeper correction.
Okay, but for how long could this correction last, or could it be the beginning of a very, very volatile period? We're about 6-7 months away from the big event, that's the general elections.
Absolutely.
Do you think this volatility will continue up until then, or do you think the markets will come back again? As we have seen in the past, every time the bounce back has been better, stronger. Do you think more of that can happen now?
No, volatility, I mean, is going to be there for sure because with the general elections, irrespective of, I mean, how much ever confidence the market has that the incumbent government would come back. But still, whenever it's a general election, it can also throw up, I mean, unexpected possibilities, and because of which that uncertainty will always be there associated with elections. So as we go closer to the elections, that cautiousness surely will be there. I mean, like I said, in case we are able to hold on to these levels of 19,500, 600, we can possibly bounce back from there and be in a broad range of 19,500 to possibly 20,500, 21,000. But in case we break this 19,500, I suppose all the people who have seen only one-way movement in the last close to 6 months, I think they would be caught on the wrong foot. And then we could possibly see a much sharper correction, which can possibly take it to levels of about 18,500 or so, which I think is a decent level from a fundamental point of view. Because at this point
Okay.
of time, I feel that the markets are slightly expensive, but then it was the sentiment and liquidity which was driving it. But if that is missed out because of the sentiment getting overturned, then possibly you can see a decent correction.
Okay. Are there still any pockets that you'd like to put into baskets where there is overvaluation and still undervalue currently, even after the recent run up? How would you be segregating these two baskets?
I think one of the baskets where one could still look at investing is the oil basket, basically, or stocks like ONGC or Oil India, basically because the way the crude is moving up.
Yeah.
And seems like we should see closer to $100 or maybe slightly higher than that. So that should be positive for these stocks. Whereas for OMCs, the oil marketing companies, I think it will be quite negative because looking at the elections coming, I don't think the government will allow OMCs to increase the retail prices. In fact, we were expecting the retail prices to be reduced, just like the way it was reduced for LPG. But I mean, because of the crude prices moving up, I think they'll hold on to the prices, but may not allow them to increase. So that will lead to lower margins. So I think OMCs is clearly a sell. At the same
Okay.
time, I clearly see there's a lot of overvaluation in the railway stocks as well as the defense related stocks because I mean like most of them have become multi-baggers just based on the sort of order flows which have come. I don't think anyone's really questioning on the execution front, where I think there could be some issues over the next 18 to 24 months because I think the execution is far, far beyond the capacities and capabilities of most of these companies who have got the orders.
Okay. I know, sir, that you don't discuss stock specifics, but I just wanted to take a sense on HDFC Bank. Particularly with the kind of fall that we've seen today,
Right.
3% fall after the details were given in the analyst call by the company, and after that the brokerage house like Nomura slashing its target price and talking about these four negative surprises, NIMs getting reduced, the asset
Right.
quality concerns, all of those. How are you looking at an HDFC Bank counter like now? It has already underperformed quite a lot. And how do you think the investors will now take into consideration these negative surprises that have come about?
I think because of the analyst call yesterday and the sort of numbers and details they gave out, I mean, quite a few of the broking houses, including Nomura, have given sort of I mean, a cautious call. But still, we should see that all the targets given by all these broking houses are still much above the current levels. In fact, Nomura brought it down to 1800 levels. So I don't think it's that negative. But at the same time, we should remember that because of this merger, I mean, it takes a while for everything to settle down. So I think we should give them at least 2 or 3 quarters more to show performance. And as far as NIMs are concerned, I think that's going to be across the banking sector, just not HDFC Bank. I think whatever NIMs we saw in Q1 of this year, I think is the peak, and from there we'll see the NIMs coming down. So HDFC Bank clearly, I mean, I would see this opportunity to buy in case we still see further lower levels. That's an opportunity to buy and hold on for a slightly longer term.
Okay, these dips could actually be bought into if you are looking at an HDFC Bank and the kind of fall we've seen on an intraday level today, 4% of a fall right now, 1562. Since we're talking about the banking space, I also want to draw your attention to the better performing sector, and that is the PSU banking space. Especially
Right.
in the last few days, we've also seen the second ranked PSU banks really on an everyday basis give out returns of 15-20% odd. How are you looking at this entire PSU banking space right now? We've already seen one entire cycle of a move. We're again seeing the second rung move again. How are you advising investors to go about it right now?
See, I mean, as far as the large cap in the PSU banking space was concerned, I think it was a discovery after being completely written off closer to about the COVID season and even about a year and a half after that. And then we've seen an extremely good move in the PSU banking space because, like I said, it was a rediscovery that these banks are back in action with better balance sheet and lower NPAs. And what we are seeing now is a sort of catch up happening from the smaller PSU banks. Because again, when the whole market was so bullish, people were looking for pockets which had not performed and possibly finding reasons as to why they should move and put their money into. And I think that's one of the reasons why we have seen these also smaller banks moving up. But then at these levels, like I said, for the other banks also, that the NIMs, should start, coming down as far as the PSU banks also are concerned. And I think valuation-wise, they are more or less fully valued, slightly overvalued. So I think this is a good opportunity for people who are holding on for the last many years. A non-performing sector. I think it's time to book out because the sort of returns which they're given the last year and a half is extremely good.
Okay, understood that as well. Also wanted to take your view on the entire auto space amid the recent news flow coming in from the US, especially when we talk about auto ancillary, the strikes in the US going on. Some of the auto ancillary companies have come out with statements that if the strikes prolong, then there could be an impact on the sales. Not so much of a concern right now, Suprajit Engineering, Sona BMW, these kind of companies. But how are you looking at the scenario built up? We've already seen the entire sector go through a tough period of COVID, and beyond
Absolutely.
that, the semiconductor issue. Things had just started to iron out, and then we see these fresh concerns. Is that a concern at all, or do you think this will quickly sort out?
Sentimentally negative, but then we should remember that they really can't afford to have this strike going on for too long. So I'm quite sure it'll get sorted out because end of the day it'll have an effect on the economy because automobile end of the day is the biggest sector and employment generator. So I don't think this can carry on for too long. And because of this sentimental impact, negative sentimental impact, in case we see a correction in the auto ancillary space, I think that's a good opportunity to buy.
Okay, let's talk about 4 or 5 stocks that are contributing most to the decline today. HDFC Bank, we've discussed already, 107 point of a contribution in the overall Nifty reduction today. Reliance Industries is contributing 43 points, ICICI Bank 13 points, L&T 8 points, and Bharti Airtel 7 points as well. Would you want to talk about any of these stocks or any of the sectors they belong to currently? And you believe that despite the kind of fall we are seeing, it could be a good opportunity to dip in?
Reliance, I think, is the other stock which can be bought into. Today we saw a 0.25% it's a stake sale by one of the investors. I think it was a block trade at a discount, because of which we saw Reliance coming down, and that also affected the Nifty to a certain extent. But I think, if you see a further correction in Reliance, I think that's a good buying opportunity. But clearly don't expect it to move back fast. I think it'll take a while. But if one is looking at a 9 to 12 month sort of a scenario, I think it's a good time to invest into Reliance Industries.
Okay, good time to invest in Reliance Industries if you have a time horizon of about a year or so. 2383 currently, down about 2.18% right now. Mr. Balika, again, a lot of discussion has happened around the way the mid and the small cap spaces have actually moved up in the recent past, in the last 4 or 5 months, outperforming the major indices for sure. But there has been slight sense of euphoria building up. How are you
Right.
looking at these two pockets? Do you think this is a time for extreme caution for those of them investors who have already had exposure right here? And what should be the ideal strategy for them to follow now?
I think clearly there is euphoria across various markets in the mid cap and the small caps. And if you look at the valuation, they're sky high. Already about 24, 25 x 1 year forward. And it's high time that one took profits off the table as far as this segment is concerned. At least take your investment out because whenever we see a correction in the mid cap and the small cap space in the past, we have clearly seen that liquidity as well as the way the prices crack. It's quite difficult for people or at least the normal investors to sell after seeing a high. So it's a good time to book out when the stocks are still moving.
Okay, understood that. Well, many thanks then, Mr. Baliga, for being with us on the show and discussing all these pockets, several stocks, and discussing what exactly should be the investor strategy amid this fall that we are seeing in the markets. Hope this gets arrested soon as the US Fed decision is out of the way, and we will come back for more discussion on the markets going forward again. Right now, 1.1% fall on the Nifty. It's trying to pull up from the lowest point. 19,909 is the current level at which you're seeing it trading at. The Sensex is still down by about 765 odd points at 66,839. We'll have to see. Of course, this looks like it is going to be a down day again. But will we pull up soon after the decision is out from the US Federal Reserve is something that we will continue to track for you. So you stay tuned with us on to Business Today TV to catch all the updates from the world of business and stock markets. What you should also get ready is for our special series, that's Market Masters, where market gurus reveal their investment strategies for a winning portfolio. So join us on the coming Monday, that's 25th of September, with Market Master Saurabh Mukherjee to get his market insights and in-depth market analysis. You can also send us your queries on this number that's flashing on your screen, 730-308-0488, and these questions will be taken live.